Hello, friends. Welcome to the Weekend Investing Daily Bite of 11th of March. The Nasdaq cracked very hard last night, 4% down. The S&P 500 also down multiple percentage points. Tesla down 15%. Amazon, Apple, Nvidia, Palantir all down in a big way. So it seems that liquidity is finally leaving the US markets, at least not going in any further. Dollar index is collapsing, US yields are coming down, and all this should help India. We started the day at a gap down, but Nifty recovered entirely, and we are where we were yesterday. So I think for now we have delinked from this liquidity flow that is leaving the US right now, and hopefully some of that liquidity comes to us in the coming weeks and months. Today, IndusInd Bank was the talk of the town. It collapsed more than 25% at one point of time, and it has destroyed investors' wealth like nobody's business. We'll take this as a case study and you know uh, walk you through the history of how IndusInd Bank has performed over a period of time, how it performed versus other banks, how your strategy could have avoided this despite it being in the Nifty 50 stocks. So a lot of my thoughts on this will be shared in the second half of the video. uh, please stay with the video for that story. Do read the disclaimer fully and subscribe to the channel. Let's look at the market. So markets looking like a very healthy pullback, 0.17% at the end of the day, but we started the day at 22,345 and we've closed it at nearly 22,500. So almost 150 points gain from the bottom. And that is a very good sign on a day where the rest of the world is bleeding very hard. So it does seem like that the market is giving you a signal that it's not going to be easy for me to go down further. And for now, I think that's a great signal to get from the market. 0.17% on Nifty Junior also coming back from a low of 58,162 to close at 59,274. So more than 1,000 points, 1,100 points gained from the bottom and closing higher than yesterday, half a percent up on Nifty Junior. Mid caps also recovering from the gap, closing the gap and closing half a percent, 0.4% higher. And small caps not really recovering like mid caps, but nevertheless dropping only 0.65% at the end of the day, which is not so bad, I would say. Bank Nifty, which was majorly hit because IndusInd Bank, which is one of the components of Bank Nifty, was hit badly, still managed to close just at that exact support level at 47,850 and down 0.75% for the day. Gold is up 0.73% in INR terms. I am expecting a big move up in gold, but I could be completely wrong. I'm usually wrong about 50% of times when I try to predict things, and hence we don't predict anything when it comes to our strategies. Market breadth about even in some cases. So Nifty 50 was roughly even. Nifty mid cap 100 also even. Nifty 500 slightly biased towards the red. Small caps were more red than green. So it was sort of a mixed bag for the day. The heat map looked very different in the morning. Everything was red. You could see big cuts on the screen, but then big heavyweights were pressed into the service. So ICICI Bank, Reliance, Bharti Airtel, Sun Pharma, Bajaj Auto, all these stocks helped the Nifty recover, although we still had fantastic uh, I should use the word fantastic. Some people don't like it. Enormous losses in Infosys, Mahindra, Hindustan Levers, Power Grid, Cipla, Bajaj Finserv, Wipro, Axis Bank, and of course IndusInd Bank, which is right here, which you can't see. I'll discuss in detail in the second half. The Nifty Next 50 saw some extremely good moves from sectors like real estate. So you are seeing DLF go up 4%, Lodha is up 5%, Chola, REC, PFC, all the finance stocks also going up. IOC, Naukri, DMart, these stocks also going up. Zomato recovered from about a 4% fall to about 1.5% only. Motherson, Sumi, Siemens, ABB also lost some ground along with Bajaj Holding. This is where you can see the real estate index 3.6% up in a single day. Very good move, I would say. It's almost like a bullish engulfing move. And it has reduced some losses for the last month. Over a 3 month period, of course, real estate is still one of the largest losers in the market. Oil and gas gained 1.2%, public sector enterprise, infrastructure, tourism, financial services, and commodities gained more than 0.5% for the day. The worst hit, of course, was private banks, 1.4% down for the day. But private banks have been overall very, I would say, stable in the last 3 and 6 months, one of the lowest falls amongst all sectors. And over the last 1 year, private banks are at the bottom at plus 1%. Capital market continues to bleed. So stocks like BSE, CDSL, all these kind of stocks were bleeding 1% down there. 3.3% gone in this current week, 12% gone in less 1 month, and 31% in 3 months. So that is now, I would have expected capital market to lead the market down, but it is coming with a lag. And now capital market stocks in the last 3 weeks have really, 3 or 4 weeks perhaps, have shot down the most. So you can see in the last 1 month, capital market stocks are the worst hit after after IT stocks at 11% negative. There you can see the real estate index not making a new low, not really gapping down also much, and a very nice comeback. 3 day high is the close versus previous closes. Phoenix Mill, Macro Developers, DLF, Oberoi Realty all doing quite well, although some stocks were still in the red for the day. So 3.6% on real estate. And now we come to the story of the day. IndusInd Bank destroys investor wealth. Now let me just put a disclaimer here. I have no beef against IndusInd Bank. I'm not trying to show it in any poor light. I'm using it as a case study to show how investors behave in the markets and how you should not be behaving in the market. That is the whole point of showcasing this case study. So you probably already know this. IndusInd Bank came out with a release saying that they have about 1,500 crores of derivatives losses that they've just discovered, and hence that loss would approximately amount to about 2.3% of bank's net worth as of December 2024. So you would think 2.3% net worth is gone, not such a big deal. I mean, but when it, because banks are leveraged entities, your net worth is that base on which you create that leverage and give credit. So it multiplies in a very big fashion when even a single percent of net worth is lost. And we lost 27% of IndusInd Bank. So um, in terms of market cap, I think maybe like 40-50,000 crores has been lost recently. I think from the top, they have certainly lost somewhere near 70-80,000 crores. So the market cap of 1 point some lakh crores has now come down to about 50,000 crores or something like that. So a big cut. Now, if you see this pattern, from October itself, there was big move down, big gap down, which never got filled. This itself was a big indication that this stock is not recovering at all. This stock is hovering around here, and then as soon as it got a chance, there was a big gap down again. And this small candle here probably was the last window of exit for many folks. Uh, February 2025, 28th February, if you look up the data on that day, there was a huge volume candle. So my suspicion is that a lot of insiders sold here. They knew this was coming. That's what I would think, given that volume candle and the open interest that has opened up. A lot of people bought puts. So just like we found out today, but the price was telling us what the story is developing. Long term, first phase of IndusInd Bank was January 98 to March 2009. Here also, despite having been in the market for almost a decade, uh, post the GFC crisis, I mean you really had no returns on this stock. But then the exponential phase started, phase two, where from March '09 to August 18 in the next decade, you made a 78x return on this stock. Can you imagine 78x in roughly 1 decade? That's a 58% CAGR for that period. So if you came to IndusInd Bank during that decade, I mean, you were rewarded like nobody's business. And then of course it post August 18 there was a huge crisis, which emanated in the COVID times, where the viability of the bank itself was in question. But then somehow more capital infusion, etc., was done. Confidence came back, and the bank uh, virtually went from 200 rupees again to nearly 1700 rupees on the price, and now we are down to about 655 at the close. So this last one phase has seen erosion, major erosion, of about 63% on that. Now if you compare IndusInd Bank with Nifty and private banks and Bank Nifty, what you will see here is that it has done fantastically well till 2018, like 8,000% gains on IndusInd Bank versus Bank Nifty of 2,300 versus Nifty at 634. So all was good till then. But then something happened post July 2018, and in the last 7 years, this bank gave a return of negative 63%. uh, and even before dropping, if you were to go back to beginning of 2024, it was still down 20% over the last 5 years, whereas other equivalent comparables, like for instance Bank Nifty was up 80%. Then you have Nifty private banks up 53% since then, Nifty itself up 98%. So underperformance has been sort of extremely obvious all this while, and essentially hope against hope was keeping the investors busy here. If we compare it with other banking stocks in the last 7 years, you will find that few banks, RBL, Bandhan Bank, IndusInd Bank, all three, the troika, have been reeling under this underperformance since 2018. City Union Bank also last 6 7 years no returns, minus 7%. IDFC First plus 38%, Kotak 49, HDFC Bank 77%, Axis Bank 91%, Federal Bank you would not have imagined this 127%, and ICICI Bank, the the biggest sort of leader of the pack, at 332% in the last 6 years. So also to just to move away from the focus on IndusInd Bank here, over the years several banks here are telling you that leadership was changing in the market. Even if I were to compare HDFC Bank and ICICI Bank, HDFC Bank of 77% versus ICICI at 332% makes no case for you to stay with HDFC Bank if ICICI Bank is doing that actually. But let's come back to the hero of the story. So IndusInd Bank down 63% in the same time. And going back further also, you can see in the last 10 years also, ICICI Bank leads, HDFC Bank is right here, Federal Bank, Kotak Bank are in the middle, and you have RBL, Bandhan Bank, IndusInd Bank, and IDFC losing a lot of ground. Now, how momentum has shifted within banking stocks since 2009. So you can see here in this table, uh, PNB was at rank number one, you know, and basically IndusInd Bank was right down there at uh, minus 70%. This is a very wide actually table. I'm not sure how to show it. Uh, So I'll just pan across it. So you can see that in the year 2008, IndusInd Bank was at at the bottom. It clocked minus 70% that year. But then as years moved on, IndusInd Bank was in the top rung counters. So you can see 4 years, 5 years, 6 years, 7 years, 8 years. Until 2017, it was almost amongst the top three banks performing very, very hard. And then suddenly in 2018, it lost. It's 2017, it started to slip. 2018, it lost that battle to other banks. And then since then, it has remained in the bottom rung of the banking table, every year losing, or at least not being in the top tier gains. And only in 2023 did it really sort of come in the top three. But then again, it lost big time in 2024 right here. So the momentum has been very, very weak in the last many years. Uh, and if I were to just compare it to where it got inducted into Nifty, for instance. So 2013 was that period where IndusInd Bank got inducted into Nifty, and Post that, it did a fantastic run, a 470% kind of run, but then it collapsed again in 2020, and till very recently it mirrored, the overall performance of Nifty. But now, in the last 6 months or so, I mean, it really gave up that particular performance. So, what happens is that when you buy Nifty, for instance, if you're buying ETF, Nifty mutual fund, you're actually buying stocks like IndusInd Bank necessarily, because the ETF will buy all the 50 stocks, the mutual fund will buy all the Nifty components. So ideally, you should be buying stocks that have within the Nifty framework which are showing strength, and that is only possible when you actively look out for those stocks. Because, like in the Yes Bank case also, Yes Bank went down from 400 to 5 rupees. The Nifty did not exit from Yes Bank as a constituent till 25 rupees. So 400 to 25, that move down, you were necessarily a part of that, being a investor in Nifty, hence in Yes Bank. And Yes Bank was losing from 400 to 25, but you could do nothing about it. Nifty was bleeding because of Yes Bank's impact also. And as a composite buyer of the index, you can do nothing about it. So try to find ways where you can eliminate these kind of stocks, which are not performing from your index performers. So again, ask yourself before you decide to enter a stock, what has the stock done to deserve your hard-earned money? It cannot just be that there is a hope of the future that it will catch up from past underperformance. In almost all strategies that I can remember in the last many years, no strategy has picked IndusInd Bank in terms of its you know constituent, and it has consistently kept a very very low momentum score. Right now also, till yesterday, momentum score was at 3, and hence when you are looking at an active strategy, it will never pick stocks with such low momentum score, and you will be saved from this kind of a you know complete bloodbath in some stocks. So wealth destroyers, don't sort of will not give you a chance when they are destroying the wealth. We have to spot them, we have to remove them early, or they will come and find you and erase your wealth. So that is sort of the, because sometimes what we feel is that something has gone, like some stock has gone from 2000 to 600, we say "Ab aur kitna girega," but that is a very wrong way of looking at any stock, because 600 can become 300, 300 can become 150, 150 can go to 75, 75 can go to 25, and 25 can go to 0 also. So at every step, you are risking 100% of what is left. And if that exposure itself is meaningful to you, then you should be taking charge of that exposure. If that exposure was not meaningful to you, let's say you have a portfolio of 1 crore, but you have 10,000 rupees in IndusInd Bank, then it doesn't matter. You even if it goes to 5,000, it makes no difference to you. So that's like a complete waste of your mental space to even have that stock in your portfolio. So basically, your portfolio's health should remain good at all times. We have created a utility where you can check your portfolio's health, so you can see how many percentage of your stocks are in strong momentum, what percentage of stocks are in weak momentum. Is your portfolio overly concentrated? Now, concentrated portfolios cut both ways. If you have great concentration and those stocks are doing very well, I mean, you are the king of the world. But if the concentration is there and the stocks are dropping like what happened today, you'll be killed. So, I mean, give a sort of a thought to promoter holdings. I mean, Elon Musk has lost 60% of his wealth in the last couple of weeks, few weeks. I mean, that's the other side of concentrated portfolio. Concentrated portfolios look very good when you're going up, but they are you know extremely harmful when on the way down. Is your portfolio well diversified? This also the portfolio report can give. It's completely free. You can choose to do it or not do it. That's your choice. You can scan the code. It will take you to the site. You can key in your portfolio, and it will send you a PDF report telling you what that report is. So let us know in the comments one or two stocks that have caused a lot of damage. Sorry about that typo. And in your investing journey. and do stay away from weakness in the markets. That is the biggest disease in any portfolio. Thank you so much for watching. Do like and share these videos, and do subscribe to the channel. Thanks. Bye.